Hey everybody, it is Chuck Barone on Tuesday, July the 30th, 2024. Another day living the dream, guys, aren't we all, right? Interesting chat here about the U.S. debt, which passed another wonderful freaking milestone today at 35 trillion freaking dollars. I guess, according to Miggy, some genius in Russia came out and said that America now has, with its debt so high, has begun to push humanity toward a global catastrophe. Well, yeah, that's kind of true, I guess. I don't know about the whole rest of the world, but maybe this country for sure. The interesting thing about our national debt, though, guys, the vast majority of it is owned by Americans, American people, or American institutions. Sure, we have our Chinese and Japanese and European debt holders, but truth of the matter is the bulk, the huge majority of it is owned by American people, the American people, American institutions. It'd be interesting to see if the government came hat in hand to these bondholders, bill holders, note holders, whatever holders, and ask them for some kind of reduction. We're paying more now in interest than we're paying for national defense, guys. Payments on debt going to be 1 trillion. They were saying it's 2 billion a day to pay interest on the debt we already have. And we are now borrowing at the pace we're borrowing 5 billion a day. So we're borrowing the 2 billion a day we need to pay the interest plus 3 billion a day more. This sounds like madness to me. And I'm sure it does to all of you too. Most of the people on this show certainly a little more conservative financially. We're going to have to do something, guys. The government's going to have to get in there. The sad news is, they can't agree on anything. They're unwilling to help each other with anything. They, like if there was a Republican president, the Democrats only want to stop him. They don't want him having any kind of accomplishments. The same if there's a Democrat president, the Republicans want to stop him. And it's just not a great way to govern the country, guys. We got problems in this country that we have to get both sides together on to use their brains, if they have any, to solve these problems. And they're just unwilling to do it because the American people are letting them get away with it. We are, all of us, guys. We're letting them run over us like we're a bunch of idiots, like we're just the dumbest asses on the planet, and they're getting away with it. We're letting them. But anyway, I ramble. Great question there, though, Miggy. Honest, great comment at least. Interesting times we're living in, and we're going to have to get. This is something that we can't, we can't stick our head in the sand like an ostrich on this forever, guys. We're racking up $1 trillion in debt every 6 months. I remember when the debt passed 1 trillion for the first time, everybody was wigging out. People weren't used to talking about numbers that high, that many zeros. Now it's just like, well, 35 freaking trillion dollars, retards. Anyway, before I get rolling on and on, I got a lot to talk about here today, guys. Before I get rolling, though, let me take a half a second. As always, welcome everybody to the show. Thank you, guys. Thank you. All of you guys on the chat, too. Thank you guys all so much for being here, for helping the show out, for being supporters. Really makes a big difference, guys. I appreciate every single one of you. All right, so let's talk about markets today. So as we all know, we got the Fed coming up here end of the week. Well, Wednesday and Thursday. Or is it Tuesday? Well, anyway, Fed coming up. I think it's Wednesday, Thursday. So we'll have Powell talking. Maybe it's Tuesday, Wednesday, though, because they still want to call it a July meeting, and I guess Thursday is the first. But anyway, I digress. We got Powell this week. We know that. The consensus, pretty much a certainty, the Fed will not begin cutting rates this month. But they will change their language to send a signal that they're going to commence rates cuts in September. So the market kind of taking this as reality, pricing in a 100% certainty that rate cuts will start in September. If I was a betting man, I might wager a little bit the other way on that one. Because anybody that says something's 100% certain hasn't been around very long. I've never seen anything that's 100% certain except death and taxes, and maybe the U.S. debt getting run up higher every single freaking day. But the market's kind of on hold, basically, guys. Playing the market like Powell and the Fed are going to start cutting rates. The market's leaning that way, it's starting to move that way. But we're kind of on hold a little bit here until we actually hear the language. So today the stock market was mixed, a weird day. The Dow up 203 points, 40,743 on the Dow. The Nasdaq falls 222 points, 17,147 on the Nasdaq. The S&P falling 27 points, sitting at 5,436 on the S&P. It's another one of those weird days where the narrower index, the Dow Jones, rises. The Nasdaq and the S&P both fall. Earnings today, the earnings I saw, not coming in real good, guys. You know, the S&P been pretty fortunate where about 85% of the companies reporting earnings have beaten the estimate. Now it looks like that might be turning around a little bit. Tech stocks really having some trouble. Fascinating times, is like I always say, we're living history, man. Let's have some fun with this. All right, the bond market. Bond market today, kind of a weird mixed bag too. The 10-year gets a bid. Buyers buying the 10-year. 10-year falls 4 basis points, 4.14% for the 10-year. The 2-year, not as much interest. 2-year sits unchanged, 4.36%. So there you have it. The bond market, a big nothing burger today as well. The dollar falls 8 basis points, 104.47 on the dollar index. That's not really much of a move there either. Precious metals today down, but not much happening. Gold falls $1.90 per ounce, sitting at $2,409.50 for an ounce of gold. Silver down 1 penny, $28.46 for an ounce of silver. So again, not really much happening. Everything on the Fed. Oil today up 49 cents a barrel, sitting at $75.22 for a barrel of West Texas Intermediate. Not much of a bounce for oil, which has been kind of coming down from low to mid 80s. Now going to be, I'm telling you guys, I've been saying it, 70 to 75 is where oil wants to be. Bitcoin today falls, down $1,323, sitting at $66,209. Bitcoin on a little bit of a slump here. It was really had a big run up, as we all saw. It was over 70,000, fell back down to in the 50s, I believe, rallying back up, has not been able to get enough steam to bust through that $70,000 number again. So it looks like that's going to be some resistance. That's the number that they need to get past. We'll be watching it, reporting on it for you guys as we do this every day. All right, so let's talk about the Fed and Powell. I think, guys, well, okay, let's just say I'm wrong, because I really don't believe they're going to cut rates in the middle of an election. I just don't believe that. But let's say that the Fed does decide to defy Trump and earn his wrath. That happens. If the Fed cuts rates in the middle of the election, get ready to hear Trump complaining about that every single freaking day. He's going to call it, Powell trying to influence election interference for the Democrats. He's trying to help the Democrats. He's trying to boppity boppity boopity bop. That's what's going to happen. But let's just say they do defy Trump and say, screw you, we're going to do this, and they start cuts in September. Okay? The overnight rate, which is what the Fed controls, sits today at 5.35%. So if you're the Fed and you're seeing inflation rates have not hit your target of 2%, even though they are much more manageable than they were at their peak, prices are still going up, guys. And the accumulated inflation, which is what everybody sees on prices every day, okay? Talking about inflation going up 3% is one thing. Talking about accumulated inflation at 20% is completely something else. And everybody wants to focus on this small number when the American people who are buying groceries, paying for stuff every day, are seeing this number, plus 20%. Okay? So if you're the Fed with this knowledge and the inside data that they have, and the lack of brains that they have. Are you going to cut rates? If you're going to cut in September, you're going to cut a quarter, you're going to cut a half, going to go 3/4 like you did when you were raising rates. How are you going to do it? How much and how fast? And as I was saying in the show yesterday, that is what the conversation is going to be. How much, how fast? So what do you think, guys? Let's just, even discounting the rate, the pace of cuts, okay? Where do you think the new terminal rate will land? Because what the Fed looks for, they call it a terminal rate, which is very negative sounding, but that's what the way they describe the rate that will not stimulate business, stimulate borrowing, will not, make it slow down borrowing, slow down business. It's not restrictive. You know what I mean? So they're trying to find that perfect number, which is the number they call the terminal rate. Okay. So what do you think they're going to go down to? So we're at 5.35% today. Do you think we're going back down to zero? I would say the chances of that happening are zero. We're not going back to that unless, of course, we're facing the Great Depression or we're facing a world war, we're facing something ridiculously stupid that we have to finance and can't afford, which is pretty much everything. But I really got to say, in my mind, we're not going back to those ultra low rates. My opinion, Chuck Barone only, my estimate would be the terminal rate, overnight rate, about 4%. So about a total of 5 quarter-point rate cuts. Okay. Now the bad news for that is that would certainly stimulate the economy. When you see rate cuts, just the idea of rate cuts will get people thinking, get people started to borrowing. When the rates do come down a little bit, you lower it at 1.25%. Okay, from 5.35 to say 4% roughly. That'll stimulate the economy. The only thing is, it'll still leave mortgage rates in the high fives. I don't know if that's going to be low enough to make mortgages affordable with these prices. Crazy times coming, guys, but this is what we need to start talking about now. How fast are they going to cut, and when will the cuts end? And will we have a recession while this is happening? Now, I've got to believe that if we're not in a recession when they start to cut rates, chances are we will not have a recession. That's the final piece of the puzzle to this soft landing. It's going to be really interesting to see how Powell finesses this, because not only does he have to really work it out where, number one, you don't want to cut rates too soon because you're going to get a big bounce back in inflation. You don't want to cut rates too late because if you do, you're going to get a big recession, right? You got to be careful cutting rates during an election, because one of the people the person who would be most injured by that happens to be the most vitriolic of all the candidates, and a guy that will never hesitate to try to embarrass you and do what he does. And you know what he'll do to Powell if Powell starts cutting rates, especially if he starts cutting rates aggressively. So we got some crazy stuff coming up, but there's my prediction, guys. I think that ultimately Powell brings it down to about 4%. I still say at best, even though the market believes it's 100% that we're going to get a cut in September, I'm telling you right now, thank you, Dave and Molly. Much appreciated. I think the Fed will have these 5 1/4-point rate cuts, and I think they'll end up on a terminal rate just over 4%, 4.1%. That's Chuck's guess. But I got to say, at best, 50-50 at best, and I still say it's lower than that, to have a rate cut during the election. I doubt that that's going to happen. Another interesting thing I saw today, they're talking about the Treasury manipulating the economy, manipulating things for political interests to benefit the Democrats by the way they're structuring their portfolio by selling way, 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 way more short-term notes than they're selling long-term bonds, locking in lower rates. Well, the truth of the matter is there was a long, long time or I was mad at the freaking Treasury. You've heard me talk about this before, because they didn't lock in long-term rates when they were so ultra low and kept selling just shorter term paper, which now they're rolling over into higher interest rate notes. Guys, it seems like they do everything ass backwards, right? So the idea that they're still selling more notes than they're selling bonds, that's just the way they've been doing it. I don't really believe I don't know how you really manipulate the economy so much by selling shorter term paper than longer term paper. I think they really believe rates are going to fall. They know rates are going to fall. So why would you lock in a higher rate now when you know in 6 months or 12 months you'll probably be able to get a lower rate? So there's that myth put to sleep. More analysts I've been reading now, this is really silly. More analysts talking about it's not important for us to hit the 2%, interest or 2% inflation rate. Not important as long as it continues to come down, even if it's slow coming down. As long as it's continuing to go down, it doesn't have to be at 2%. The economy can do great with higher blah, 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 blah. Again, I go to the accumulated rates. When you're already now got 20 to 25% accumulated inflation piled on. Well, now he's continuing to be having inflation above your 2% target, just going to continue to pile on to this accumulated inflation. So I really believe that the 2% number does matter. Personally, I would like to see a little bit of deflation, especially in real estate, especially at gasoline prices, especially on groceries, especially on insurance. There's a lot of things I would like to see deflate. Of course, the government freaks out about that, so we probably will not see that. They would actually aggressively move to inflate if that was looking like it was on the horizon. But a little bit of deflation. The problem with deflation is once it starts, it's hard to stop it, just like this inflation, truthfully. But nonetheless, when you got 20% accumulated inflation, a little bit of deflation sounds good, at least to me. What do you guys say? I'm sure it does. Ameriprise, all of you guys with Ameriprise accounts, know that you probably could be part of a class action suit. Ameriprise being sued by its own customers for what they're doing with their cash sweep, right? What happens with them is if you make trades, you have cash positions, they automatically sweep it into their money market, which is paying somewhere between 0.3%, which was the standard rate for a long time, remember that, and 2%. Clients pissed. Most money markets paying between 4 and 5%. They want to know why Ameriprise continues to sweep their money into these lower yielding money markets. Now we got a lawsuit about it. Fascinating stuff. Customers not taking crap from these companies anymore. Ameriprise is going to ultimately end up showing they were taking this customer's money and probably investing it at higher yields, glomming that extra money for themselves. You'll see that come out. Historic changes in real estate getting ready to come up starting in August, guys. Everything changes in real estate. The way you buy and sell real estate changes. As long as I've been alive, which is a long freaking time, the system has been a simple one for real estate. The seller, whoever's selling the property, pays both his own agent, call the listing agent or the seller's agent, and he pays the buyer's agent too. Now, this is usually negotiable, but usually the number is going to come in between 5 and 6%. 3% for the buyer's agent to entice the buyer to bring people to see your property. 2 to 3% for the listing agent, depending on how much work and how much marketing and things he's doing to get your property listed and out there. Well, all that changes in August, guys. That's the way it's been forever, and it was a very, very good system because it worked for so long. But what happened is we had a big class action lawsuit, sellers saying they were being coerced into paying the buyers real estate costs, even though they had no complaint about that system when they were the buyer and got the benefit of the seller paying the agent for them. Well, now buyers are going to have to pay the agent themselves. So buyers, I've already been reading articles where buyers, when they sit down with a real estate agent wanting to buy a house, are being confronted with contracts, are being told they're going to have to find, if the seller will not pay the fees to the listing or to the buyer's agent, the buyer will have to pay those fees up to 3%. Now, guys, I've been doing loans. You guys know I've been doing loans here for 100 friggin' years. Guess what? They can barely come up with a 3.5% for an FHA down payment. Now you want to tack on 3% for the realtor? It's going to be a disaster, guys. You're going to have people trying to buy houses without the help of a realtor, trying to navigate appraisals and inspections and contract language and addendums on contracts, and it's just going to be freaking chaos. I can't wait to see how it all plays out. It just sucks because the industry is already in a very bad place right now, and these new rules are going to do absolutely nothing to help make it better. And lastly, U.S. debt passes 35 trillion, as I mentioned earlier. Disgusting, horrible. But here's the deal, guys. It's up $1 trillion just since January. Are we really to the point now where we're going to borrow $2 trillion frickin' dollars a year? We're going to have $2 trillion a year additional debt. So we're going to go from 35 to 36 by the end of the year, 38 by the end of next year, 40 by the... Guys, it's unsustainable. Not going to happen. I got to see what's going to happen is whoever gets elected in November is going to get faced with this. I have not heard either side talk about, well, they've said they're going to do something about the deficits and the debt, but they have never really said what they're going to do. They just say they're the ones who can fix it, never telling us how they're going to fix it. Anyway, guys, I'm babbling. I'm over 20 minutes here. Thank you, everybody, for your support. I will be back tomorrow. Tomorrow's a big one. It's Powell Day. We're going to have a lot of stuff going on. We got all kinds of stuff, guys. The finish of this week is going to be huge. And by the end of this week, we're going to know exactly where we're going with interest rates and with, the way the economy is going to work with those interest rates. Crazy times coming. Anyway, that's it for the day, guys. Thank you, everybody on the chat. You guys are awesome. As always, much, much, much appreciated. Everybody watching later, we love you too, guys. Please hit the thumbs up, hit the like button. Changes the algorithm around. We need to get more views, guys. Need to get more views. I need your help. Help me out. We'll see you tomorrow. The news you need. Take care.